And welcome back to the Market Wolf, where I give you the best bear case, the best bull case, and I give you my opinion. It's been a while since I have been here. Thank you for coming back and returning to hear what I have to say. Take a look at the SPX chart. Remember back many episodes ago, many moons ago, when I set up this chart and I talked about the long-term outcomes from this symmetrical triangle. We nearly nailed our measured move down. We've come back up a little bit, and now we've been experiencing chop. And why haven't I been here? Because I am not currently in the market. Remember, I got out of the market to get into the egg business. And guess what took off? Eggs took off. The Market Wolf knows exactly what he's doing. But I am looking to get back into the market soon, and I'm going to have to learn how to option trade. So if you know how to do that, please inform me about the basics, because I understand charting wonderfully, but I never learned how to options trade. I always played to the upside, and I would not ever play to the downside. I would just basically be essentially a swing trader, and that was all I did. But now it's time to make some money, I believe, to the downside. Let me show you our chart from the VIX. Remember my very first episode when I identified, sniffed out, detected, and found the symmetrical triangle on the VIX. Here we are on the daily on the VIX. Here's that symmetrical triangle. I'm going to zoom in and show you what's been going on here. Now, typically, when you fall out of the symmetrical triangle, like we did in, August of 2022, and then you come back into the symmetrical triangle, you get bullish. And we did. And we actually made it to the top with volatility on top of that symmetrical triangle. We crashed through it, came back down, crashed through support, and we've been below that for a very long time. But look at what's been winding up here. What's been going on the past few days as we're approaching the end of this symmetrical triangle. Why all the volatility? Well, if you've been paying attention, you know we have a domino effect of bank failures taking place right now. Many of us knew that this was coming. You can see on the daily, we have a bullish divergence in the mix right here as the 20-day begins to work its way up and cross forward. We also have a bounce on the RSI, and momentum still looks like it's to the upside. Now, we re-entered the symmetrical triangle. We fell out. Will we re-enter it again? Possibly. Remember, this is not perfect. This gives us an idea of what's happening and what's going on. So we knew that a true meltdown in the market, a true financial crisis, could be happening as we approached this area of the triangle. And now it seems the banks are beginning to fail. Now, the Fed has gone back to quantitative easing in a certain sense. They are bailing out the banks. But at the same time, they're still on this restrictive schedule of trying to control inflation. What does that mean? I'm not sure anybody knows what that means. If you know what that means, leave a comment down in the comments section. But what I do know, I believe I know, is that the music is going to stop eventually. And if the Fed is serious about continuing to tighten, they are not going to be able to bail everybody out. That surely means more bank failures, and that means more volatility. So we could be potentially completing a very, very massive cup here in volatility. And guess what we're looking at back here? That's the COVID pandemic. What about back here? We're looking back at the 08-09 crisis. So we could complete a cup right here at 41.39. We could complete one right here at 50.41, or we could complete one all the way up here at around 86.22. And That's not to say, remember, that we couldn't go higher as we charted this out. If we really have a major financial meltdown, you could see even, let's get rid of that. You could even see a bull flag put on up here somewhere as we skyrocket forward. Now, that's a lot of speculation right now, but if you look at the momentum back here in 2020 and you see what the momentum was doing with the volatility and how it just went wild, well, we haven't seen that again since. We haven't seen wild volatility up and wild volatility down, crashing out. But with these activities in the market, we haven't seen this kind of stuff since 2008. And we have to pay attention to this very carefully. Let me take you now to the S&P 500 just to wrap things up, and we'll keep this short and sweet. CMND is a stock that I'm keeping an eye on. It might be one that you want to keep an eye on as well. If you're interested, leave a comment in the comment section. Right now, they're on the way down. I don't see any indications that I would buy in yet if I was going to swing trade it, but it is something that I'm keeping an eye on. So, the S&P 500, we have been basically chopping around for many, many months now in areas that I identified long ago. We have essentially, if we can get this to all load up, it's taking it a little bit of time here. Yeah, there it is. You remember this red box. And I told you, we're just going to be hanging in this area, chopping in this area, and that's what we've been doing. I'm going to go ahead and extend this out now. This is between about the 389.73 and 407.63 levels on the S&P 500. And as of now, we are inside of a symmetrical triangle. This is the daily. And this increase in price on the daily has not really shown us any, this is hard to get confirmation on this, right? Because we had increasing price on decreasing volume. It should have petered out. Again, now we've got increasing price on this candlestick on increasing volume, but then back down to increasing price on decreasing volume. So a lot of chop, even in the positive. And this section of positive here on the daily, does it make much sense to you? This is when bank failures are going on. So odds are, if you go back to the episode on that I cut again many moons ago on the plunge protection team, you'll understand why that is probably happening. We are probably having money injected into the markets. That still on the daily time frame has not stopped, however, from us moving towards what looks like another bearish divergence on the daily time frame. Let's just take a look at the weekly. I doubt we see a bearish divergence confirmed on the weekly yet, but if it's there, that would certainly be of interest. And again, you can see we've mostly been hanging out in those levels on average, and no bearish divergence. Actually, it is bearish. It's a total bearish divergence, as a matter of fact, and it has stayed that way. The 20-day, and we are under the 20-day on price. We got a little bit above it here on the weekly, right? But smashed back down, so we're below the 20-day on the weekly. Not a good sign. We had a lot of incoming volume so far this month, but remember, this month isn't over. Let's just take a look at the monthly here. While we're here, momentum looks good on the weekly. We might get rejected on that RSI on the weekly. And yeah, looking at the monthly, we're hovering right in range, right where I thought we would be for the long term. So this is why I haven't been making daily episodes. There really isn't much point right now. This market has mostly been trading sideways, but we are on the VIX seeing the first signs of potentially that major market meltdown that we have been anticipating. Does that mean it will certainly happen within the next 3 or 4 days as we reach the end of that symmetrical triangle on the VIX? No, absolutely not. We'll have to watch the pattern, adapt the pattern, see what's going on, and pay attention to other market indicators. But these are good readouts on what could happen and what might happen. So we will see. I'm glad you stopped by. We'll see you next time here on The Market Wolf.